Hi everyone, welcome to today's video. So today I'm going to do a very quick video but a very important video regarding how rich people are investing their money in today's economy. Now this video is a prognosis as to how the world will shape up in the next 5 years and where we are heading towards, how rich people like Mark Cuban, Kevin O'Leary, they are making investments and what is it that we can do as normal retail investors. So I will speak of this topic in three different key areas. Now this is such a wide macroeconomic topic that I can't cover the entire thing on a short YouTube video, but I will try to give you three very important segments on this video. So please listen to this video very carefully, very important. Please watch it till the very end. So the first and foremost point regarding investing, and if we take a look at our investments, how they will shape up in the next 5 years, where is it we should be investing? So the first key concept that we should understand is the concept of diversification. I will play out a very small clip regarding one of the interviews that Mr. Ray Dalio did. I absolutely admire him. I follow him diligently. And this is one of the points that he made on his video.
Okay, first, no cash is trash. So don't keep it in cash, right? Second, the most important thing I think that an individual investor or any investor could do is know how to diversify well, because all those asset classes will outperform cash. And so if you, but also risk, when you can diversify well, and when I mean diversify across countries, right, currencies, asset classes, and so on, so that you have that balance. Then you take your tactical moves from there. But the most important thing, I think, is to know how to diversify well. I think most people are not doing that. I think most people think, okay, it's the stock market. And the stock market, I think, is relatively attractive in relationship to the alternatives. But that dynamic is going to start to change as monetary policy gets tighter and so on and so forth. So diversify well in those various areas, the country, right, the currency, the asset class.
So there are a few interesting points that have come up from this interview. I will link the interview in the description box, so please go and check it. But some key very important points from this interview is that number one, we are living in an extremely complex, extremely ephemeral, extremely volatile world. Things are changing at a rapid pace, which is leading to a lot of tectonic changes in how you see the world, how technology is shifting, how big companies are structuring their businesses. This is leading to a lot of uncertainty in the world. So we as retail investors can take out a very important lesson that the way investments used to work in the past, for example, just invest your money in an FD and sit tight and you are done, those kind of investment strategies do not work anymore. So it is very important for us as retail investors to constantly update our knowledge bank and keep on learning about new investment instruments that are coming up. I'm not pointing towards crypto. That is your prerogative, whether you want to learn about it or not. I'm just pointing out to a general trend that please do not assume that because FD or because real estate or because gold used to be a great investment, it would continue to be a great investment in the future also. Why? Because the world is getting increasingly volatile and it's changing every single day. The second point on this interview was, and this was the key takeaway for me also, that in this modern world, you need to be diversified. So diversify across different assets. For example, buy gold, buy bonds, buy real estate, buy commodities, buy stocks, and do a bunch of different diversification. Because as the world gets more and more volatile, if you are putting all your money just in a house from an investment purpose, it can really backfire. Secondly, do geographical diversification also. This is something that I am looking closely into. I have started diversifying my assets into US stocks as well, because of the fact that the world has become extremely volatile and it is extremely important for us as retail investors to stay diversified. So this is the first key message that I want to drive home, that because the world is so volatile, it is important for us to continue to learn and stay diversified in our investment. Now this gets me to the second important point where I'll speak about 5 key macro trends that are happening in the economy that you must be very mindful of, because this can really help you make a lot of money in the next 5 years. So I'll speak about these 5 trends. So the first key trend that is shaping up our economy is that we have hit a world where there is going to be zero interest rate or near zero interest rate for a substantial period of time. Now such a phase has not really existed where it is almost given that the interest rates are going to be zero. Now what does this mean? What does it exactly mean that the interest rates are zero? Now, zero interest rate in simple terms simply means that you go to a bank and deposit 100 rupees. How much interest rate are you making? So that's a simple way of understanding interest rates. Now, if the Fed interest rates are zero and we have moved towards a world where interest rates are constantly zero, then if you're going and saving money in your bank, you will make absolutely zero returns in real terms. This is a very important point for you to note because it fundamentally changes the way we invest and look at our investments. Because so far, if you go and speak with your parents, they would be doing fixed deposits. They might be keeping a lot of money in cash. But unfortunately, in a world where the interest rates are moving towards zero or have already moved towards zero, and that scenario is going to continue to play out, it puts us in a very bad situation that people who do not invest their money in growing assets like stocks, cryptocurrencies, real estate, etc., they will be taking a massive hit. So it is very important for you to understand this one key macro trend, that if you're not investing your money in a zero interest rate environment, then you're losing it. Because if you just go deposit your money in a bank FD, then you will continue to lose a lot of money. Therefore, it becomes extremely important for you to become a little bit financial savvy, not because you want to grow your wealth. Of course, that's one part of it. But because if you're not financially aware, you will end up losing a lot of money. So please keep this point in mind. In a zero interest rate environment, you are set to lose a lot of money unless you start investing your money properly. The second key trend that is happening in the economy is that there is increasing concentration of wealth. The rich are getting richer. Now you might say, Akshat, this is like a very common thing, nothing new here. Rich always keep on getting richer, but that pace is accelerating. And let me explain you why. One of the key reasons why rich keep on getting richer is that because they start using technology to make more money. For example, if you take a look at FANG stocks, now it is MANG stocks or whatever, but the point is that the FANG stocks actually hold 20-25% of US stock index. Now that is a very big amount, and if you go back in the US stock market history, no 5 companies have held such a massive clout on its entire index. What does this indicate? And all these 5 companies are tech companies. It simply indicates that using tech, people are getting richer. These are people like Jeff Bezos. These are people like Bill Gates. These are people like Mark Zuckerberg. They are getting rich by the day because the more technology the world uses, the more rich these people get. If you compare it to the ancient times, in the ancient times, what used to happen? That people used to go in the fields and they used to cut crop or plant seeds, and they used to exchange time for return of money. But now people can leverage technology, and leveraging technology can allow you to grow your wealth in massive proportions, and that is what is happening. Let me give you another recent example. A lot of crypto millionaires and billionaires have come up in the last 5 years, and no marks for guessing here, majority of them belong to the upper strata of the society. So this disparity between rich and poor will continue to grow, and people who do not learn to leverage technology or invest or do something productive will keep on suffering. Okay, so now let me give you another example about the crypto trend. Now, every time I say the word crypto, people start saying that, hey Akshat, you're misguiding, you're doing this, you're doing that. No, I'm just simply explaining about a trend. You need to be educated about this trend. This trend has created so many millionaires in the last 5 years. So, as middle class people or as people who are looking to learn more about investing options, at least go and explore that space. I'm not even asking you to invest $1 or 1 rupee on it. Just simply learn about this space. It can help you understand what is going on in and around this world. Now let me do a thought exercise. Why do you think Facebook has changed its name? I will not give you the answer on today's video. I will probably make a part 2 of this video. But honestly tell me, why did Facebook change its name? There is a technical reason behind it, and understand what Facebook is going to do next from a technology point of view. Why is it doing it? Because Mark Zuckerberg understands that if he is able to ride the next wave of innovation and next wave of technology, he can continue to pile up more and more and more wealth. But we, majority of the retail investors, we keep on criticizing any new trend that comes up in the market. Now, realizing all these facts, what I'm doing is that I'm actually going to divert some of my investments to climate focused tokens. Now, this is a trend that is coming up in the market, and I'm going to make investments in climate focused tokens, be it NFTs, be it DeFis, etc. If I get an opportunity to make investments in this space, this is the space that is coming up, and this is the trend that I'll be betting some money on. Now, the third trend that is happening in the market is called as decentralized finance. Now, again, this can be a video in itself. I can make a video on climate focused tokens and climate focused decentralized finance, DeFi in general. I'll probably make another video on this topic. Let me know in the comment section. But DeFi is a third major trend that is defining the landscape of investments in the next 5 years. So what exactly is decentralized finance? So first and foremost, let's quickly understand what centralized finance is. So centralized finance is something that you and I are witnessing currently. If we go to a bank to transfer our money, we'll meet the bank manager. Now, he or she will make the decision how to transfer that money, how much commissions to charge, this and that, right? So the finance is centralized. It is being controlled by a middle party, which is the bank. For example, if I have to transfer my money to my friend in the US, then I will give my money to my bank manager in India or accountant. Then they will take that money, they will deduct certain amount of commission. So out of 100 rupees, they might deduct 3 rupees, send 97 rupees to my friend in the US. So these middlemen are eating up a lot of commissions, be it remittances, be it insurance, be it a bunch of different things. So decentralized finance is a mechanism where these middlemen like investment banks, commercial banks are removed to a certain extent so that it allows people to cut off these middlemen and avail financial services at a lower cost. Now a lot of applications are being built, especially on Cardano, Solana, Ethereum network. So I'm going to explore these as viable investment options going forward. Now I can hear a lot of clicking noises. People will say that, hey Akshat, you know what, you are talking about DeFi and the fact that there will not be any middle party who will take responsibility for our money. I'm not saying that the system is perfect. It is evolving, it will evolve, and I can't cover that on a short YouTube video now. I will shoot part 2 of that. But I'm just trying to point out very quickly where I'm going to put my money next. So this is one key area that I'm tracking very closely, and I'm looking to divert some of my investments in this space, and I'll keep you posted on that. Now the fourth trend is happening in the stock market, and it is very interesting. And I got asked a question that, hey Akshat, people have been investing so much money in index fund, and do you think that this index fund investment strategy, is it going to be alive even after 10 years? Would it make sense? Now this is a very interesting question because I personally feel, and I'm a contrarian investor, any space or any stock or any major instrument where there is a lot of influx of retail investors, somehow big sharks figure out a way to rig the system. Now the same scenario, in my opinion, will soon start playing out in index investing also, where there will be something called as index management. Index management already happens. So the market will move sideways. For example, it will move between the Nifty range 17,000 to 19,000, right, for a long period of time. But sector rotation will happen in such a way that big parties will make money. But if you as an investor has invested in index, then your money might not move a lot. Now this is a pure hypothesis. I know that a lot of people will disagree with that. That is my viewpoint, so I'm keeping a close eye on it. But I genuinely get a sense. Some things you just understand from intuition through experiences. And this is my understanding as to how stock markets could be rigged going forward. So from that perspective, I'm going to diversify my stock market investments also. I've been very bullish on India. Majority of my investments will be in India. But I'll start taking more positions in US stock markets. I will keep you posted on that bit also. Now, fifth and final trends are miscellaneous trends. Now, these are supply chain oriented. These are rises in oil prices, etc., etc. Now, there are two major things that we need to keep an eye out right now. One is regarding China. Now, of course, China has given so much external debt to multiple nations, and it is exerting its political influence. Now, there is a tug of war that is going on between US and China, and it remains to be seen that which country will come out on top. But we will get a lot of clarity on this trend in the next 5 years. So therefore, it makes me believe that it might not be a bad idea to make some Chinese-centric investments, and I will start taking some of the positions. Now, a part B here is that in a country like India, a lot of our economy moves through supply chain, right? There is no problem of demand in an economy like India where this population is very high, the income levels are rising, but supply chain constraints are very huge. Now the entire world is going through an energy crisis. Now, if it happens that energy becomes very expensive, be it in form of oil, be it in form of other raw material that is used to generate energy, then it might stall our growth. So it is very important for us to understand how this energy landscape is moving, because growth of India literally would depend on how the supply chain on the energy side shapes our economy. Now this brings me to the final section about owning hard asset. These are time-tested things. Hard assets, according to me, are things that you can feel and touch and take pleasure in. So here I am going to own a few hard assets. Now hard physical assets that I am unlikely to own are gold, silver, etc. There are a host of problems owning these assets, especially in a country like India. Probably another video, let me know. But I'm not going to own these type of assets. Yes, I'm looking to purchase a property to stay. That is for my own pleasure. That is not from an investment purpose. Second, I'm going to continue to buy more commercial real estate. That is another key area where I have already diversified. I have talked about it. And if you want, I'm in my parent city. I own a few commercial properties here. So I'll give you a tour of those commercial properties also. Let me know. My idea behind owning commercial properties is that A, it allows me to build cash flows. So I'm continue to invest some bit of my money in commercial real estate. But my simple rule in terms of buying commercial property is that I buy prime properties. These are in excellent locations in city center areas of any city very close to airport or railway station where the city converges. The simple rationale to that is that these type of properties have the highest potential of growth and they are very easy to rent out. So from that angle, I am owning these type of properties only. I try to scout for properties that are not super expensive and I buy these properties in tier 2, tier 3 cities in India. I genuinely do not see value in terms of buying commercial properties in Delhi or Gurgaon or cities like this. I scout for tier 2, tier 3 cities because these areas are growing, they are becoming satellite cities to major metros and therefore they can grow very fast. So from that angle, I am buying commercial properties and that is my investment strategy. The summary that I want to leave you with is that number one, it is extremely important to understand the trends that are happening in the macroeconomy. I tried to outline a lot of trends. Of course, I could not have outlined everything on this video. Second, it is very important to stay diversified because of the uncertainties that are involved in today's world and take your investment decisions according to the things that you understand. Now, this third point is very, very critical because sometimes we assume that, you know what, I can only understand gold and therefore I'll continue to invest in gold. That is probably a wrong approach. You should also try to learn new things and start taking some positions in these new asset classes because that is where our world is heading. I hope you enjoyed the video. Give it a thumbs up and I will see you the next time.